This is David Patrick, Fitzstock Charts market video update for July 10, 2019. We are in a 10-day uptrend. This is the fifth good uptrend this year. We are spoiled rotten with these uptrends. We had 11 last year. We're still looking at 2012 historical chart pattern comparison that we absolutely hit it out of the park with. This is the week before option expiration. We talk about it all the time, where the market often pulls back and hits some sort of pivotal low. Usually it can happen as late as Thursday and Friday. Are these pivotal lows in? We'll look at the market in a moment. You have to define your risk and allocate your long market exposure that meets your risk profile. Don't do exactly what I do. I post all my trades on Twitter and you get them with the daily updates. But my risk profile is different than yours. I am watching every tick in this market, even when I'm away. I have my phone. I micromanage a lot of my positions. I put on big size, I scale fast, and I become leveraged long in certain instances. And I have, I think, 3 or 4 times this year. And I did many times last year. But if it doesn't meet your risk profile, there's no way you should be more than 100% long market exposure, because if you can't stomach the risk. I'm using the previous day's low as my stop. If I get stopped, I get stopped. Some people can't stomach that stop. It's too big. Then don't put on that big of size. Always be able to stomach where your stop is. If you're using our focus list, in your swing long positions, you know where the stop is. They are listed for you. If you're a hybrid trader like myself, you're using the previous day's low as your stop. Don't change your stop. Allocate the amount that you can stomach, whether it's $1,000, $10,000, $100,000, whatever it is, that you can stomach the loss versus your stop. And don't micromanage those positions versus those stops. Don't raise those stops based on emotions and opinions. Our 90% club. First of all, our numbers are absolutely crazy again this year. 259 different stock options that I'm engaged from our focus list. 2 of them we've been unable to scale. We don't know if they're winners or losers just yet. We do have 24 losers. 233 winning options. 89% win. Absolutely unheard of in the industry. Go ask. Go ask your friends, go search on Twitter, go Google search. You'll never find it. It doesn't exist. And to be honest with you, I don't know if we can sustain that kind of winning percentage. We've had over 75% since we launched the service, which is crazy to begin with. This year has been just absolutely unbelievable. 1,074 different options that have doubled since we launched the service. 296 triplers, 131 doublers this year, and 31 triplers this year. Absolutely crazy numbers based on no emotions, no opinions, all technical analysis, historical chart pattern comparisons with defining your risk and using rules of engagement based on market trend. Okay, so we are going to look at the markets right now. 2012 is over here on the, oops, I just screwed that up. Was over there on the right. Let me see if I can put it back into play here, where we had this sort of elongated bull flag, and we didn't know if we were going to break out. And the Dow Jones, if we come all the way back here, is breaking out. Now, you have to understand a couple things. First of all, one day does not make a market. That's very, very important. It's very, very good odds that we do not close at the highs of the day today. Okay? And if you go back and look at this candle right here, where it challenged old highs, broke new highs, and then we closed right back down. I'm not going to predict this because there's a lot of other historical chart pattern comparisons that don't go straight up from here. So we have to keep an open mind and we have to use stops. But if we would continue on the historical chart pattern comparison, we do see a run into earnings season, just like we saw in early 2013. Late 2012, early 2013. So we never like to predict price. You know, if we look at this market, and pull up the SPX, I've been leveraged long. Just to go over, because I did have a question about this as I was just getting ready to record the video. Leverage long, what does leverage long mean? Well, I trade ETFs that are more than 100% long market exposure just to give you an example, SPXL. That's 3 times long the S&P 500. So if you allocate 10%, you're 30% long market exposure. If you allocate 40%, 40 times 3, you have 120% long market exposure. That would be long market exposure if you're using those leveraged long ETFs. Obviously, if you have call positions on, you could be even more leveraged long, especially if you exercise those. If you're just trading futures or just trading stocks, then you're just going to be 100% long market exposure if that meets your risk profile. Okay, let's just go over a couple times recently that I had over 100% long market exposure. Well, we got long here, and we had our scales, and then we added. So I was over 100% long market exposure there. We got long here, and I believe I added. We got long here, and I think I added here. In this one, I've been mostly 60% long market exposure, maybe 70 or 80 a few times. We're breaking out, and triple top, I said triple tops don't hold, and so far they haven't. We're clearly above it. Yesterday's low to me is significant because that was at the 10 SMA. It was also the week before option expiration. So if we break that, I don't want to be leveraged long anymore. Okay? It's real simple. At the same token, if we come down here, we close and give up half these games today, it means nothing. Okay? We want to see continued price strength confirmation. That's what we want to see. We don't want to see a break of the previous day's low. That would probably signal the market's going to get sloppy. If it does, I'm probably going to book all profits at SPXL and go to cash. Because I don't want to trade a sloppy tape. And I don't want to be leveraged long. I have huge year-to-date gains. And you should too. We just talked about the 90% club. We just talked about our 89% win. If you don't, then we need to talk, and a few of you I've talked to try to straighten out what we're doing wrong, right? Because you want to be on the right track. You want to get long the market, the SPX, the Dow, the NASDAQ, early in uptrends, and then select from our ESFL, our focus list thereafter. Okay? I'm still leveraged long. I got leveraged long today. I'm still long Facebook, and that's how I'm trading. And you have to understand, everybody is different. Look at the NASDAQ. The NASDAQ is breaking out. You got to remember, if I blew up this candle, the close means everything, and the next day means everything. Because one day, I say it all the time, does not make a market. So what's leading this market higher today? Transports are not. Financials look good, but they're not leading right now. Small caps? No. So we just looked at small caps, transports, banks. How about energy? Is energy leading? No. It continues lower below the 200 SMA. So that's not leading. What about biotechs? Is that leading? No. So industrials are leading. The S&P is leading. And the NASDAQ is leading. But I will say, if we have to throw some yellow caution flags out there, I'm a little bit cautious that we're not seeing some sort of sector leadership, whether it be small caps, whether it be transports, whether it be financials, or whether it be oil. We're seeing none of those lead. So once again, one day doesn't make a market, especially when you don't have leadership. So even though I'm leveraged long now, once again, we already know where my stop is because I trade size and I also trade tight stops, right? So we blow out yesterday's low, back to cash, right? I don't want to give back all these hard-earned profits year to date. I had 5 phenomenal uptrends. I'm not willing to give that back just because I got a little aggressive here on this breakout. And once again, we don't know if it's a true breakout yet. This could be a red candle. We can come all the way and fill the gap today. We don't know. And that's why if you're not comfortable with every position you put on, then don't put it on. Don't put it on. Everybody's different. I say it all the time. Let's fly through our stocks. Apple still looks good. We're above the 200, the 50, 10 SMA. Is that leading? You know, we just saw the NASDAQ's breaking out. Is Apple leading? No. Is Amazon leading? Absolutely. And we were all over this one with our focus list the other day. Is Google leading? No. Does it look good? Yes. Is Netflix leading? No, it's not leading. Does it look okay? It looks all right. Booking, not leading. Tesla, not leading. Facebook is leading. It's coming into this gap, though, and it's a little bit slower, but I see no reason why it can't go to $210. And that would be my price objective, and it probably would trim back up to just 25% runner if we get there. So we have Facebook that looks good. Amazon looks good. Those are leaders. NVIDIA, is that leading? No. Is Micron leading? Micron looks good. It's not leading. AMD, is that leading? It looks like a nice cup and handle. It's still not leading because it's not breaking out. Avgo, is that leading? No. OLED, is that leading? Is the SMH leading? No. Is Xilinx leading? No. So we just flew through a lot of different sectors. SMH, we flew through transports, Russell, banks. We only found 2 leaders so far. Let's search for more. Microsoft, that is a leader. That looks good. Oracle is a leader. Looks good. That's 4. Adobe is a leader. That's 5. Coop, now, yes, yes. 6, 7. CRM, no. Workday, yes. So that's 8. So we got 8 leaders so far. You want to see, I'd like to see 10. Team, yes. We got 9. Snap, is it leading? No, it's lagging a little bit. Roku, is it leading? It's just grinding back up to new highs, not leading. Expedia, no. So we got 9 so far. Baba, Baidu, no. In fact, that whole sector I would say no to. Did we look at Workday? I believe we did. I can't remember if we counted that one or not. Cyber, no. Panwa, no. BMW, eBay, Vive. Vive looks good. That'll be our 10th. So we do have 10 stocks leading, which, is that enough? Shop looks okay. I don't know. It's going to be tough to say. We're way off our highs right now. We're only up 16 handles. We were up 23, 24. So as of right now, the market's telling you, no, that's not enough. You need more. You need more. GoDaddy, is that leading? No. Is Wix leading? No, it's not. SQ, is that leading? Looks okay, but it's not leading the market. Are any of these banks leading? No, 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 no. What about MasterCard and Visa? MasterCard and Visa, absolutely. So you got 12 stocks. PayPal, 13. BlackRock, is that leading? No. CME has been very, very strong lately. I like that. ICE is leading. You got 13 stocks. DBX, CYOU, no, no, no. Let's look at Amgen, Guild, absolutely not. None of these stocks look like they want to lead. Vertex, RGN, oops, ISRG, RGN, Aluminum actually looks pretty good. It's stalling a little bit, but let's give that one anyway. Alexia. So we got 14 stocks. What about CMG? It's slow. It's definitely a leader, but it's slowing. It's not thrusting higher. IQ, Twilio. Twilio looks okay. We've got 12, 13 stocks that look pretty good. But once again, what is very shocking to me is we're seeing no sector leadership. That is unusual. Does that mean the market has to fail and go lower? No. But you can see right here, this candle, we're at the bottom part of the day right now. And I think the market is identifying what we just identified. What is leading this market? There's not much. There's about, a couple handfuls of stocks, which is great, but no sector leadership at all. We can't say the semis are leading. We can't say the Russell's leading. We can't say the banks are leading. We can't say the energies are leading. We can't say, all we can do is say industrials, S&P, and NASDAQ as a whole look good. So I don't want to rain on the parade because we're in a 10-day uptrend. We have a historical chart pattern comparison that's bullish. We're high stack with profits. But I also have to point out we have lack of leadership right now in sectors. And we will need some sector to get going for this market to continue to go higher. If that doesn't happen, we're coming right back down. And that's why it's very simple. I got my stops in play. If I get stopped, I get stopped. No harm, no foul, right? Let's look at the weekly. Let's look at a few other things before we wrap things up. The weekly still looks fine, I believe. Let's flatten this thing out. MACD is the highest level it's been since October of last year. So it's not at new highs with price. These candles are very bullish, so the weekly still looks good. I don't really have too much negative to say other than we don't have any sector leadership. And obviously, we're way off the highs of the day. I think there's still a very good chance we grind higher into earnings. And if I'm wrong about the historical chart pattern comparison that's already paid us, and I'm wrong, and I'm right about that we don't have sector leadership, and we come and we take out Tuesday's lows, it's very simple. I start getting defensive again. So have a plan and have a backup plan. When you enter investments, you enter trades, you already know where your stop is before you enter them. That way there's no emotions, there's no opinions, and you trade robot style. That's all I have for the market video update. Have a great day.